part of the Aura group of companies, which is a boutique investment group. We focus on three key areas. One is OTC liquidity, and the second side for us is custodian. So OTC liquidity, we basically use Aura's balance sheet, bring liquidity to the market, but the more exciting part for us is the custodial side. So that's two phases. We launched Australia's first cryptocurrency vault. So one of the major issues we saw in the space was a lot of the funds raising capital from the public didn't have anywhere secure to store it and didn't have the ability to wrap insurance around that. So we work with some of the exchanges in Australia and overseas and a few funds to actually provide insured holdings to them. And we also, our major shareholders are the major shareholders of Goldfields Money as well. So we have a joint offering to market where we go and offer to bank ICOs and crypto-based businesses, etc., as well as banking the fiat side, but also banking the crypto side. So that's a quick summary on us. We're doing a few interesting ICO advisory projects in the space, mainly focused on listed companies or larger private companies. And that's us in a nutshell.
Awesome. Hey guys, my name's Schebesta. I've been, I founded finder.com.au, and we've been writing about cryptocurrency and comparing exchanges and writing guides on how to buy it, sell it for quite a while now. We've rolled it out around the world as well, and we run an OTC desk, HiveEx.com. We've been working a lot on compliance and identity right now, which has been really interesting, and got some really fascinating stuff going on in terms of how to really scale that, because I think it's going to be a really interesting part going forward.
Oh, you don't have a mic. Do you want me to leave this one?
Ladies before gentlemen, and then we'll cut back to tonight.
Oh, thanks.
In fact, why didn't I start at that end of the table?
Yeah, so I'm just sitting here because DJ needed a woman.
Well, no, hang on. If we want to go back to the history, we can talk about that. But Bridie, we're not going there.
No, we're not going there.
Sorry.
No.
I'm sorry. My wife was a bit upset about that, so it's all right. Let's carry on. My son was happy, but my wife was...
I'll start talking now for you. So yeah, I'm Bridie. I head up the blockchain workstream at AgriDigital. So we're probably one of the older blockchain projects in Australia. We've been around since 2016. We're an ag tech shop, so we build software in agriculture, mostly in grain and cotton. And we've been experimenting with what blockchain offers to ag supply chains, since mid-2016, and working with some of Australia's largest ag businesses like CBH Group and Rabobank in the Netherlands. So I'm definitely on like the non-money side of things, which sucks at times in this business. But running a project, dev team, and onboarding customers for our commercial launch of our blockchain protocol next year.
Awesome, Toby.
Hi, can you hear me?
Yes, I can.
Yeah, so I think a lot of you have met me before, sort of been around these meetups quite a lot. At the moment, my main focus is running our fund vehicle, which is a private fund called Polybius Capital. We try and work with and invest in a lot of the top tier projects. Some of the ones we're really focused on at the moment are Algorand and Hashgraph, which are coming to market shortly. I'm helping the Block8 guys and myStake with their project, because it's one I really believe in at the moment. So just trying to align myself with people in the community I can really get behind and take further in the space. And then obviously I've done a lot of work in the OTC space with Fred and HiveEx and IR before that. So I generally try and apply myself to all things on the financial aspects of the blockchain and crypto world.
Awesome. Thank you very much. Big round of applause for our panel. I like the clapping. Okay, first question. Bridie, AgriDigital, are you guys doing a cap raise? Are you looking for money? And if you are, is it going to be a utility token or will it be a security token?
Right. Good first question. which I
Thank
probably
you.
can't answer.
Well, no, you can
Yeah,
defer
so
that.
AgriDigital, we were originally seeded by our co-founders, 3 co-founders, all farmers, ag background, and did a Series A at the end of last year, raised 5.5 mil from VC and family office Australian money. We purposely missed the whole ICO thing. So that probably answers part of that question as to where we sit on the decision around utility and security. In saying that, the project that I'm heading up at the moment is a blockchain protocol for ag supply chains. It makes sense for it to be kind of a foundation structure. And we may be looking to raise some money into that separately from AgriDigital, which is also going to Series B next year.
Excellent. Great answer. And there'll be some more questions on that, but let me just shoot a few more. Now, Stephen Moss, I saw today, or yesterday it might have been, can't remember. They blend into one these days at the ripe old age. But custody, big issue. Just talk me through that, mate. What is custody for? What is custody? Custard? What is custard? I don't know. I'm onto it. Right? Yeah, I've got something here. Rick, relax. Right? You're on next month, mate. Sorry, Stephen. Just give us an overview of this custodian thing, right? Because all I know is that I've got these things that I put on cold storage. I've got mates that tell me, oh, mate, I've got like 20 characters. I've got to remember them. Otherwise I get in there, and then I hear that the funds won't come in. There's no pension funds. There's no big money coming into the space without people like you around. So, what are you doing, mate? I mean, where is it? How's it work?
So, good question. I mean, when we first started in the space, and bear in mind, we're a small piece of Aura Group, we were getting a lot of questions from compliance. Where are you going to hold your bitcoins? And are they going to be hacked? Are you going to be hacked? Do you need a different Wi-Fi network? And then when we ultimately put on cold storage, there was another issue because everyone thought someone was going to run into the office with a gun and hold us up for our cold storage and all of that stuff. So originally we started using the vault, and it's a physical vault from fingerprint scanners to facial recognition to escorted security, etc. We started using it for our own purposes, and then saw another issue in the market in that most of the investors in this space just want exposure. A lot of the investors in funds, whether they be trading funds or just long funds, or a lot of the investors coming through private wealth just want exposure, and they're not experts on cryptocurrency. We estimate about 70% of people in the market don't really understand blockchain. So the question became, how can we wrap a product around this space to give trust to people that want exposure to the space but don't really understand it? So the answer for that was the vault. We were able to work with an insurance company to wrap a policy around it, which was ultimately a syndicate of Lloyd's. And that was a really big event. That was the first time that's been done here. It took us about 9 months to actually put a process together that they were happy with and happy to insure. So I guess the real opportunity there is to work with some of the exchanges. We're working with a specific exchange here in Australia which are about to come out and offer their clients the ability to tick a box and insure themselves against hacking or loss of the cryptocurrency that they're holding in the exchange. And we're working with a lot of funds around town that are looking to raise money from retail investors and give them some sort of certainty that their cryptocurrency is not going to go missing or be hacked or someone's going to run off with it, etc. So I think in enabling this industry and ultimately getting a bit more confidence in it from people that don't understand this space, it is a really important product to have and a really important product for anyone out there ultimately dealing with retail.
Bring it on. And mate, how can we get in touch with you?
Just through our website, decentralised.capital.
.com.au. But if anyone needs to know, just come straight to me because I reckon he's going to give me a kicker, right? So anyway, but no, we're not all for that. We're here for educating the ecosystem. But I think Fred's a good one for this. Fred, where do you reckon the value is being created right now, at this time in blockchain?
Yes, I think that a lot of people right now are building. I think we've talked about this before in a few other meetups. Because a lot of money's been raised, but actually, there's a lot of frameworks and things like that that are missing in blockchain, and it makes it really slow and arduous to construct things. I know that I think that these new waves of security tokens, which Toby and Matt, you guys are really working on, which is awesome. I think that'll bring a lot of value to the market and a lot of clarity around these utility tokens right now, which are a little cloudy. I think there's a lot of smoothing of processes and regulation. I think that's going to also help out in terms of how do we actually go and comply and be compliant with what we're doing. And I think a lot of people are just getting, relatively a good understanding. Like, you can talk a lot more in general. I know you guys, we're all participating. I think it's awesome that we're all here, and it's awesome that we keep supporting this industry and all the jobs that it's creating. I think there's a lot of value in that, but teaching everyone and teaching more people every day about this industry and bringing more people in, whether it's a good coin, bad coin, whatever it is, whatever the project, growing the industry of itself, like, it's actually very small. We're actually quite a small community. Like, you can reach out to pretty much anyone. I think, in the last 3 conferences, you've probably met every single famous person in crypto. And it's quite small, right? So I think it's that community that's a lot of value. We're all sticking together. It's interesting, even coins that are just 99% down, they've still got this loyal base of people supporting it and hopeful, right, that it's going to grow.
Yeah, as you say that, this just is a great question. I wanted to just ping this at Toby, who's one of the best traders I know. Toby, grab your microphone. Are you on?
Yep.
Yeah, mate. Where do you see the trading environment happening for the next 6 to 12 months? Oh, yeah. Okay, wrong question. Where do you see the trading environment happening in the next 3 to 6 months? Oh, and maybe then skew that out to.
Exact price
Are you ready?
forecast.
You with me? Are you with me?
Can we do a precise prediction?
By the
of
way, I
Bitcoin?
forgot to mention, there is no financial advice being given on this night tonight. If you do take financial advice from anyone in the room, you have 5 days to make a decision, and within those 5 days, you can rescind that decision. Thank you very much. Just because ASIC's coming next week, so we've got to be compliant, right?
Yeah, so I think it's really interesting, and obviously it's been a pretty brutal bear market after the run-up we had in late last year, early this year, and that's wiped a lot of projects out, which is probably the best thing that ever happened to the space. And now you've got people building things instead of, I think every project developer out there was either making up a project or trying to be a trader, and that sort of didn't end well. You've seen big pullbacks in Bitcoin and Ethereum, and now what I think you're seeing is the sort of resurgent projects that have survived the bear market actually starting to perform. So on the sort of token and value proposition, there's a few things that are doing quite well at the moment. And you're seeing support coming from the sort of kingmakers like Binance for more community-driven projects that didn't have pre-mines and didn't do all the dodgy things. So the 2 sort of notable listings on Binance recently have been Ravencoin, and the other one has been Decred today.
Raven, is it?
Yeah.
Can you
Got to shill Raven.
But can everyone look behind themselves on the panel, please? Oh, yeah. Can you tell us a little about Raven, please? Okay, no. Okay, thanks, Toby. Well, let's cut it, and then this will be the last question I'm asking. But Matt, I was thinking about it before, and what are going to be the challenges of you getting people on your platform, mate? Because it's great tech, it's all there, but how are we going to make it happen?
Great question. I think the biggest challenge people have when it comes to adoption of tokens is what are tokens, essentially. And blockchain is a scary concept for a lot of more traditional businesses who have real value, have real assets, have real cash flows, but aren't aware of the potential that tokenizing their shares would present them. So I think education of the benefit and also providing a very smooth, easy onboarding process for that tokenization process could really unlock value that previously they weren't even aware of.
And setting up companies couldn't be more painful. It's such an antiquated process. Basically, go around.
If you don't do it yourself, you've got to pay your accountant $1,000 to do it.
Yeah,
right?
exactly.
But then I got told, oh no, it only costs $290 to do it. I'm like, well, hang on, well, why am I paying him $1,000 to do it? Check 1, 2. I've started a few in the recent time. I know it's got to do with the ADD, but that's good. Right, so I've done my thing, except I've got a few other hard-hitting questions ready to go, but that'll be for later. Because don't forget, there's champagne and cake to go, right? It's our first birthday. But in the meantime, Tom, are we on with the mic? Check 1, 2. Oh, yeah. Tom, we're on. Okay. Tim Lee, come to Papa.
Okay. I'd like to ask AgriDigital a question, if I may.
Yes.
2 questions, I think, really. First thing is, number 1, how are you finding your customers are when you mentioned the word blockchain? And number 2, what portion of your actual tech is blockchain?
Yeah, I was actually thinking about that first question just before when Fred was saying like how valuable this community is, us just talking about it. Well, in a way, we kind of had a different experience in agriculture, because as soon as you started mentioning blockchain to ag businesses, all they thought of was risk associated with cryptocurrency, and that wasn't what they were interested in. So there definitely was a process in 2016, 17 for us explaining the difference between the way that blockchain is being applied through our business and lots of other businesses, and the way that cryptocurrencies in kind of the headline sense were operating. I think that there's a better understanding now, and the push towards food provenance has definitely driven kind of a overall understanding of what blockchain can offer for supply chains generally, and I think we're seeing heaps of projects now in that space offering provenance and traceability. Where we're focused on is really about driving liquidity into supply chains and providing access to liquidity for farmers and small businesses that otherwise can't access capital in traditional systems. The way we can do that is because we provide assets and then visibility over those assets and security around the way that we're structuring those digital assets and the different financing arrangements on chain to open up their different options for cheaper and easier capital. I think that there's still a lot for the industry to learn. When I say industry, agriculture is our industry we play in, to learn around what that actually means. And it's a very old industry, largely missed out on the internet. So we're moving people off pen and paper often and handshake deals. So I think there's just a level of digital understanding that is completely absent already. So it's definitely a big education process, and the whole industry is really aware of that. Was there a second question that I totally
And it
skipped
was just the percentage of the tech that's blockchain.
Right, so we run 5 developer teams at AgriDigital. 4 are focused on platform and 1 focuses on our blockchain protocol. So there's a bit of a split for you. And our customers at the moment, we have 2,000 customers all on our application layer, and blockchain is still in POC testing, early stage onboarding.
Great. There was another question on the front here, wasn't there? Oh, great. No questions down the front. That's good. All you nerds, sit down the front. No questions. The hardcore, heavy hittings one at the back. Here we go.
Hi, my question is for Toby. Why is it that the BTC market's been so flat in your estimation? Has it got anything to do with the ETFs? And what do you see in the future? Is there going to be a big move up or down?
Oh, mate, price prediction here. I can feel it coming on.
Yeah, look,
and this, don't worry, remember,
the
this
lack
is
of
film.
volatility is actually quite puzzling, and I think there's so much good news coming out of the space, but it's probably not quite enough to bring that new wave of investment in. So I guess you're probably seeing a lot of miners selling pretty close to their break-even prices, which is sort of putting a cap on the inflows. Like, I think demand's quite well balanced at the moment. You're seeing unbelievable support below 6,000, and then, yeah, it's just not really ever taking flight when it gets above there. But the underlying things that are happening in the space that could see inflows of magnitudes even larger than last year, like Fidelity taking on their custodian role. I was having a call with Backed yesterday, which is a subsidiary of ICE that own the NYSE. They're offering a warehouse custody solution combined with a daily settled futures contract, which is basically going to allow every sophisticated player that wants to get in the space but couldn't do it for safety reasons to do so, while providing like a benchmark for crypto prices that the SEC will be happy with. I think the good news flow has just been unbelievable, but none of these things have taken traction yet, and it all takes time.
So why is the hash rate so high, and what are these miners doing?
Why is the hash rate so high? Well, I guess it's still profitable for people to mine it. That's the thing. And I was having this discussion.
At what price, mate? No, there's talk about it, isn't there? So is it...
Yeah, there's a lot of talk about it. But
yeah.
I think it's well below the current price. And the thing is, if you've gone and invested...
So the miners are accumulating, waiting for the next bull run.
Well, and then they're probably selling as well, which is why I think you're seeing a capped upside. But
A capped upside. Okay. Right. Mate, my trading days were way gone. Sounded good then, didn't I? Okay, sorry, right. Okay, great. Now, next question. I've got one over here. Thanks, Toby. Thank you.
Hi guys, thank you for coming tonight. What do you guys see as your ideal solution to solve the cryptocurrency onboarding problem for users and merchants alike? Question to all of you.
Let's start
Fred?
that with Fred,
Yeah.
who's got the exchange and the onboarding happening.
So I think that when it comes to onboarding, it's getting a lot smoother. A lot of systems are just, they're able to accept KYC, AML. I don't know if the AI in that is super advanced as of yet. There's been like these, tokens like Civic and all these kind of things. I haven't actually seen them used, or maybe I'm missing it or something, or maybe someone else has seen that. But I guess in terms of having some sort of single identity coin or some single identity that everyone can buy into, I think Toby, we were talking about this before. Like it could be quite treacherous because you could just send that token to someone else and you could just be sell your identity basically, and then how would you know that's that actual person? Unless there's some sort of hardware, fingerprint, ID or scan, to really get quite detailed. I think this idea of a digital identity's got still some quite lengths to go. There are some extreme examples, right? You got China with a whole city where your personal score is rated and you're advertised if you don't pay your tax, and pretty intense, right? Bit scary. I don't know if we'll go to that level. I think microchipping people, I'm not sure who wants to get microchipped exactly.
Bingo, you mate, just take me anytime. Okay, so let's cut to the next question. Now,
I think there's another good point to that whole adoption piece and the spending and the merchants.
Not my microchip.
No, it's not. That is like the deflationary nature of cryptocurrencies aren't really designed for spending. So I know a lot of people in the crypto space and none of them are that keen on letting any go. You can download a free app on the App Store, I think, by the blockchain.info guys, and it's an instant merchant terminal. Like it couldn't be easier for people to accept it, but most people here are in it because it's a store of value and the scarcity and the sort of dislike for the current monetary system that I think it's going to take more fiat-like currencies, and I'm not a big fan of stable coins, but it's one of the reasons I invested in Algorand is because they're trying to emulate that process of a currency with an inherent stability, but it's still decentralised, that people will be pretty sure is not going to be worth a crazy amount more next year after it's sort of, if it does what they're planning for it to do. So I think it's in the design of cryptocurrencies with their ever decreasing supply. It's not in your incentive. Like you go and spend $3 for a coffee every day 2 years ago on Bitcoin, you've spent a fortune. So I think that's one of the big problems.
Awesome, Matt. I was thinking about this the other day. I've invested in all these startups years ago and over the years, and liquidity is a major issue in early stage businesses. So how do you envisage that your or people who will trade that tokenized equity asset, and where are they going to do it?
It's a great question. Well, I think one of the big things, and we've seen this at crowdfunding especially, there's no sense of you're in and then you're stuck there for 5-10 years, and that's probably the biggest risk for investors. When it comes to ICOs, we've seen a big draw for people have been as soon as it lists. Is it up? Great, sell. Is it down? Great, sell. So the exchange element is a big part of why people have been so attracted to ICOs. That and the 50,000% increase for some tokens in a short time span. For us, we think that for having exchanges internal to the company is a great first step. And the benefit of blockchain means that you can have internal markets where it's just shareholders being able to trade with each other. And then you can invite additional investors, sophisticated investors into that market. So that creates a middle ground where the company doesn't have to list, the company owners don't have to give up control necessarily of the public markets, but the shareholders and the investors get a degree of liquidity that previously, like you just described, David, you can get out if you're no longer enamored with the startup, as long as you find another shareholder who's more enamored.
Yeah. And where am I selling that?
So for us, it's going to either be an exchange that we deploy. I mean, that's why we ran myStake in the first place. The great thing about open source is that we can work with other providers to roll out exchanges just for those companies themselves. Alternatives are exchanges like the Malta Digital Exchange, who might be more than willing
Check
to list
one too. Here he is. I'm
wait a
sure
month.
he's got a few questions, but
One
I've
month.
blocked him. I've blocked
Yeah,
him
yeah.
because he's headlining next month. But yeah, I think it's a really important question because I got attracted to the space due to the liquidity, right? It was like, okay, you're going to put all this money in these startups, you go and mentor them, you look after them, and everyone goes, oh, mate, you get an exit in 5 years, right? And fucking 10 years later, the first one is still,
Exactly.
and the rest have died, right? So that's awesome to me, but I you know, if Rick, if you can do it for me, that's awesome. But enough of me. Now, is anyone else in the crowd got some heavy-hitting questions? They've got to be good. And yeah, it's got to be good. They go,
Good toss.
Okay, this is just the audience. So I guess over the last 6 months, we've obviously seen like a massive price correction for all cryptocurrencies right now. If you were to look at the cryptocurrency or the adoption rate of like all cryptocurrencies, right? So that's Bitcoin, Litecoin, Ethereum, etc. You could really only rate one of those as undervalued, right? So based on the network volume to transaction ratio and price to MECA, so that's the value of the network as a whole. You can really only look at Ethereum as being an undervalued cryptocurrency. Bitcoin, Litecoin seem to still be in that kind of correction phase, but obviously they're still quite stable, right? I just wanted to get your opinion on that and where you guys see the relative value for cryptocurrencies, obviously based on adoption. Fred?
hang on. Do you want to repeat that? No, sorry. That's Oscar, my fellow founder. Round of applause.
I think if you wind back the clock, say 12 months, you'll see, even if you go back a little bit further, you'll see that the top 10 coins are not the coins that are in the top 10 right now. So I think potentially there is a lot of big promises, and like if you go to the actual foundation of some of these dApps and what's actually going on, sure, there's gambling to some extent. There is, I think stable coins are incredible now, bringing them onto Ethereum with like true USD. I think that's very interesting. Maybe that takes the place of Ripple. That's a very controversial thing to say because Ripple's it's a retail favorite. But it's sort of a hater and a lover. I don't know, people are mixed emotions. But I do think stablecoins could potentially challenge Ripple's whole use case. And that's, I think a lot of it's trading on expectation, right? So if you're talking about undervalued, I'm not sure what I suppose you could say in a trading sense, but if you're going to go back to core principles of valuing companies and what they're being used for, I think a lot of it's, I'd say 80 to 90% of it is actually on future potential value of a lot of the coins, right? And like if Ethereum scales, that's going to crush it. If it doesn't, that's going to suck.
Right. So I'm going to keep you talking. What's the next app that's going to create the bull run, Fred? And no, hang on. So he's been overseas recently. Can we shut the door? let's just, can we shut the door? Yep. Yep. So we're in silence here. We're in a cone of silence. Is there any lawyers in the room? No lawyers in the room. Okay, no NDAs have to be signed, Fred. You with me? You with me, Fred? Right. So he's been overseas. He's just come back to town. What's going to create the next bull run?
This is, yeah. So this is not financial advice. Let's just start there. And we can just start with an NDA so everyone verbally agrees this is like, yeah, you can trade on this information, but no, I didn't actually, advise you on that.
Mate, you're being filmed, so be careful. Here, right.
I am being filmed, but yeah.
It's going live.
So there are two things.
Thanks to Crypto Sydney. Here we go.
Yeah, so I think there are two key applications which I would put my money on, I guess. This is a very far out there thing, but I'm going to pitch it, is the advent of, and this might take quite a few years, so everyone, this is not going to be able to, I guess.
To talk about, or? Hey, Tom, can you roll the film for 2 years?
DJ, if you want to give this prediction, you can do it if you want, mate. But
no, mate. Mate, I support you all the time.
Here's the thing. My contention is that as we go more and more virtual, right? So we're pretty much looking at our phones, let's say 50 to 60% of the day. Like some people probably even more, right? We are right up there. So essentially, if you think about that and you take that forward in time, you're already potentially living in a matrix, right? You're staring at your phone more than you're staring at your loved ones. You sit around with your friends and we look at our phones. Like that's pretty crazy, right? So let's fast forward in time. My contention is we will go further and further to this perspective of living in a virtual reality. I know that sounds insane. But if you were to live in a virtual reality and no matter where we are, we were to coexist, it would be very, very ineffective to use hard currency because it's very hard to exchange that in a virtual way. And in that point in time when virtual reality and virtualization is much more prominent than in reality, that will be where cryptocurrency is the default. That is the future of where virtual currencies are more prominent than fiat currencies and the hard currencies used today. DJ, you're really going for it there. But my contention, straight chat, and my prediction is that the advent of virtualization and virtual reality will produce what we will see is an everyday use of virtual currencies. You would not use hard currency because there's no point. And that, I think, will lead to that. The second thing I think that will potentially bring this is not financial advice, is in 2020 is the next halvening, right? So we get 12.5 Bitcoins every 10 minutes right now. In 2020, we get 6.25. In other words, half the liquidity of miners, which are selling continuously, will be on the market. In other words, if you want to go and buy Bitcoin, you have half of the supply from miners that are potentially going to sell it to you, which is, again, going to limit supply and, I guess, massively, I think, it's happened many times before. I shouldn't say massively, but potentially over the last, if you look at graphs, 2014, 2017, during these halvenings of Bitcoin is when we saw massive runs, and it's almost 2019. So I think we could potentially see an earlier one, but those are two things I think will start massive adoption.
Awesome. Okay, enough from me.
I've got a different take on that.
Oh, hang on. What was that a round of applause for Fred?
Yes. I just wanted to add something to that question because I think it's an important point, and I completely agree with Fred's point around the halvening, and I think it's very visionary. The ideas around the sort of virtual world we could be heading for, but in the short term, sort of to simplify my view, I think the things that are really going to catapult this whole space into the next level are going to be dApps and apps that people actually use, and we haven't seen that. And then I'd wind back that the reason we haven't seen that is because we've got no blockchain capable of running them. So I think the other thing that's going to create bullish momentum in the space is a blockchain that delivers. Ethereum is like a proof of concept, and if it scales, it can be the one. But you're seeing other protocols come out, and whether it's a Definity or a Hashgraph or one of these other things that can do it, I don't think we've got the platform to build an app on yet. So I think It's the apps that'll really lead it, and it's a platform that can deliver.
So for the last 12 months, I've been wasting my time. Okay. Is there a question at the back there? Do you play rugby?
Oh, good catch.
Yeah, is it working? Okay, we haven't broken. Question for the panel. Regulation. This is one I think that as a blockchain crypto community is one that we need to enforce and push, because you've got the status quo that doesn't like it. How do you think that we can, as a group, push to bring us to more a regulated framework, but at the same time more accepted in a global space? And yes, we're seeing that more institutions that are now coming with their own OTC desks and custody, and now realising that they've got to be involved. But SEC's now slowly warming to the fact. How do we encourage governments to build regulation? How do we get governments and work with governments, do you think, to build regulation that benefits us all? Sorry.
We get ASIC here next week, and then... No, anyone want to answer that question, or are we just going to roll the next one? Toby?
Yeah, I'm going to pass on that one.
Okay.
I'd answer technically,
Yeah.
maybe, quickly.
Righty, come on.
I have been told I have Stockholm Syndrome for regulators, so I will tentatively answer this.
Hang on,
Without giving
what was
myself
that?
away on my legal background here. But I think that technically it's really hard to go to market and say, hey, we have this product to customers. It's fantastic. You should trust us. We comply with best practice when there is no best practice to point to and say this is something that's independently set as a standard for best practice in industry. So I know that there are a few of us starting to have contacts with what the International Standards Organisation Blockchain Technical Committee is doing, and I sit on the Smart Contracts Working Group. So I'm probably pitching some of our own work here, but I think it is something that, as someone delivering a product, it's quite hard to give your customers that sense of confidence when there's so much lack of clarity in market around what these products do.
Right, I'm feeling a little bit, I mean, how's the audience tonight? Stephen, carry on, please.
Just on regulation, I think the ultimate way to force the regulators' hands in this space is just to boost involvement. It's about the banks actually putting up offerings. It's about the private wealth advisors actually offering clients parcels of Bitcoin or cryptocurrency or getting exposure to the space. It's about more companies tokenising and the benefits getting out there and the conversation actually happening. And I think that's been a huge struggle. And this goes back to the previous question on how do you ultimately boost volume in the industry or get more people involved. It all comes back to that framework. I mean, most people that are looking at investing in the space or equities or crypto, whatever it may be, they go and ask their financial advisor, a lot of them. And part of the big issues there, you've got financial advisors with very public images like David Koch likening this to a vacuum salesman at the door. And you've got people like Peter Switzer who are saying things like, quote unquote, I knew Bitcoin was bad because I watched a series on Netflix and there was a villain dealing in Bitcoin. So I prescribed to the thought that it's not going to last. So that kind of uneducated opinion really doesn't help. So I honestly think the more the people we look up to as retail investors to give us financial advice, take a hold of blockchain, actually understand it, and actually get the banks to come out and offer products and support it and have an opinion, and get that retail adoption up. I think that's what really ultimately forces the regulators to step in here and say, look guys, we need to move quicker because it's happening anyway, and that's the reality of it.
So
Awesome, great.
Just want to step in there. Sorry, David.
Cut in. Sorry.
But as a product that actually deals with ASIC on a regular basis, I think the biggest thing when it comes to regulators is just engagement. And one of the things we've learned at myStake for doing what we do has been just telling them up front, this is what we're looking to do. How do we go about this in a way that makes you comfortable? And ASIC's got a great sandbox environment. We've got one of the most forward-thinking regulators in the world, and I
Are
think
you guys in the ASIC sandbox? No, question. Exactly. I don't know anyone who is. I had a Oh, you are? Right, great.
Yeah.
Anyone else here in the ASIC sandbox? We can find out about it. Yeah,
So I can talk to you about the ASIC sandbox. We'll
talk about that later.
Yes,
Sorry.
but we're a registered agent, which is a slightly separate thing, but still directly interfacing with them. So and we would be for programmable equity. So that's a conversation we are having to move into their sandbox around programmable equity. And
mate, I'm all over it. It's all good. It's all good.
all good. But the thing to answer the question directly is just engagement. And one of the things that I think people are starting to realize is rather than trying to avoid the issue and sidestep the laws and try to find loopholes, actually embrace the laws. And one of the coolest areas we've seen recently of our customers has been equity crowdfunding and how quickly that's moved into the legislation. And all the frameworks are there. An equity crowd raise is just an ICO by a different name. So it's more of a case of, it's not, I think for a lot of people, they think it's an us versus them mentality, whereas what we've seen at myStake is more of a case of they're interested, they're engaged, they have working groups around blockchain. And Brady mentioned also the standards. There's Standards Australia is looking into this, and I think one of the best ways we as the community can do this is just constantly let ASIC know, the regulators know, that this is what we're interested in.
Gotta love Standards Australia. Okay, quick. Any crowd? Is anyone over here? Is it? What? You're on.
Thank you. Question for all the panel. Next year, I understand we're going to, from a banking point of view, going to an open data environment for customers. Just wondering what you're seeing out there as far as some of the players that might be moving in that space and some of the applications for Bitcoin once we start being able to access that data.
Yeah, so I think it's really interesting. I guess there are some players out there that have sort of already patched the open banking framework with other tools. Like there's Yodlee, and there's some other ways you can sort of conveniently get it in there, if that makes sense. I guess it was looked very grey, and there have been some awesome applications, right, that have been built using that data. I think when the framework comes into place and the legislation's there, I think then people are going to go from it being grey to actually being cool. That it's your customer's data, you have the customer right. That was the legislation. I think then you're going to see more applications and more usage of that data, because right now I think everyone's a bit like, oh, we've got this data from the bank through this strange service. I hope they just don't go and shut us down. And so the investment of those platforms, I think, has been very challenging, if that makes sense. I think where that sits for cryptocurrency, I think you've got players like Revolut in the UK, where open banking sort of already rolled out. You've got where you can literally just move your money, in between.
Revolut, yeah, exactly. I think they're here soon. My brother was talking to me about it. I downloaded the app. It's amazing.
Is that financial advice, David?
No. What I want to say, it's got nothing to do with. Is that a question? But that's got nothing to do with blockchain, mate. No, remember the story? When I talk, no one else does, right? But Fred, Revolut, right? You with me? Nothing to do with blockchain.
Revolut offer crypto though.
But Revolut, I can do dollars to my brother in Spain.
Dollars to euros to Bitcoin, so it does make it easy for people.
Okay, well, you fucking shot me down there, mate. Right. Okay, I'm running this show. Right, next question from the crowd. Have we got one? Here it is here. Anyway, get on to Revolut. My brother told me about it. He's got friends all around the world that want to transfer money, and if you've got a Hong Kong bank account, you're laughing. Okay, we're on.
Hey, sir.
A couple of bankers up the back there, though, that aren't happy with that.
Hi, all. Just a kind of deliberately...
No. Question, mate. Question.
Deliberately controversial question. The Digital Transformation Office came out, agency, let's call it, came out today saying there's no use case of blockchain. Can you please prove them wrong in one sentence each?
I can give you one word: Bitcoin.
Okay, I think that answers the question.
It's already running. We have virtual money.
Yeah, so outside of Bitcoin.
Oh, sorry.
Because that's the whole point of that. Of blockchain.
Ethereum.
Say that again.
Ethereum.
Tell me why.
I don't like Mondays. Tell me why. I don't like.
It enables so many things like the issuance of tokens, the utility tokens, security tokens, smart contracts, takes out the middlemen in a lot of transactions, can change the legal system, it can change compliance systems. It just creates an open, fair, trusted network for people to deal with people who they fundamentally wouldn't trust before. And I think we've only just seen the use cases that it can enable. But yeah, I think to sit down and think about and properly answer that question, the list would almost be never ending.
Okay, cool. Any questions in the crowd? No, I've got one. So, I don't know, there's a couple of trays up there, but the question is that I thought about last night as I was getting so excited, I couldn't sleep. It was my first birthday. I was like, you know when you're just sort of trying to go to sleep and you can't, and then you... I fucking told you, it's my party, and you talk when you're told, and if I'm talking, no one talks. Okay, cool. Quick question, and Toby, Bridie, Stephen, is cryptocurrency purely fueled by speculation? Are there actually products being built that are worthy of the current valuations that we are seeing in the market? Fucking oath it's a question.
I think what Fred said before is really true. There are use cases globally where people are using Bitcoin for commercial reasons, and I think if you look in Ukraine, for example, where there's no trust in centrally issued currency and people are storing their currency either in US dollars or in Bitcoin or in remittances and cross-border payments, and Bitcoin is providing a viable solution for sending money back through Southeast Asia. I think, I can't remember the question at all. I think I just wanted to support what you said.
No, is it fueled by speculation, right? So here we have agri-digital.
No, but it's still a more stable form of value than a lot of other currencies out there, which is crazy. But I guess we're sitting in a country where our currency, our fiat currency, is stable and trusted. And so it's harder to imagine why you would see Bitcoin maybe as a better form of stable currency.
Look at Venezuela, for example.
Exactly, yeah.
Bitcoin's huge in Venezuela because it's much more valuable than the Venezuelan currency. And it's a great demonstration of why this technology has such a future. Another example, in my mind, comes by transfer of funds. You can transfer millions of dollars worth of tokens for the cost of a couple cents using Ethereum.
So on that, Matt, mate, are you guys using a public distributed ledger? And if you're not, why not? What do you plan to do?
So this is a great question because it comes back to that scalability point. For us, the other big point is we're still working through privacy. So we're on a private network, but we have deployed our contracts to test nets for Ethereum. We've seen it work, and it's very much somewhere where we want to go.
How are they running it there, mate? How are they, keeping up with it or what?
What is?
How are they running on that test network?
They're running great. I think for Ethereum, the big question is the one we've already spoken about before, which is scalability and working through that. I mean, having a scalable network, having one that can support the same transaction load as, say, Visa or MasterCard is probably what you're going to see. Once that happens, and everyone's going to migrate.
Yeah, awesome. Okay, quick interlude here. I just want to, well, it's not really, it's just sort of before we wrap up and we might have some more questions. So I'd like the audience to start thinking of some hard-hitting questions. I haven't enough tonight. But I want to just grab Bill, but mate, are you up or not? Just want to have a quick, you want to? Have you drunk too many beers? No, sorry, hang on. Have you drunk too many beers? Okay, no.
So quick question is, we've been talking a lot about security tokens and where the market's going there, but they're throwing out the utility token in a lot of extent, other than I've just seen two companies now, because I know Matt's doing it with myStake. You're separating out the equity company from the utility company, the foundation approach. Just want to hear your thoughts on the currents on that. So Matt, maybe explain why you're doing it and why you're doing it too, Brodie. Thanks.
So I guess I'll start there. We think that there's still a lot of value in the utility token, and there's nothing better to make a unit of value for a network which people get value out of, like a utility token. For us, we think that a better approach is to fund and build and bootstrap the utility, and once that utility is demonstrable and once people start getting utility, then you can fund an open source project far more efficiently with a utility token than any alternative. And that's why we see it as being integral to any open source, public, accessible project, that's having a token which captures the value that customers are getting or users are getting out of it. It's not something you can capture through alternative or traditional means.
So I guess for us, we just couldn't see the use case for a utility token in our product. And I agree that there are instances where it is really useful and valuable, but what we're building is a protocol layer, and applications use our protocol to execute certain workflows. For some workflows, there's no cost associated. With some workflows, there is. It's much like a subscription licensing model where you're paying per transaction. And so all we needed to do was to create a smart contract that could deduct payment back to the foundation where there was a fee associated with executing a workflow. And we could mask that as a utility token and say, oh, that's where you need to use the utility token in our network. But it actually just became much more confusing to explain that to applications in market. We're going to create a utility token. It's not associated with like those that might invest and receive a dividend off it. It's just associated with using our network. And it's kind of like just a currency payment. Well, why not just make it a currency payment in our system? So that's why we kind of simplified our model. There wasn't really a need for it with what we're doing. We create digital assets that are either grain, pigs, cotton, money, and we move those around in our network for different use cases. We don't use any other tokens other than that.
Yeah, and it's a great product and a great company, and really honoured to have you here tonight, Bridie. Big round of applause. Thank you very much.
Thank you.
So I'm going to jump in here before we've got another audit question from the crowd. I'm just thinking about it, Matt. Early stage investors chuck a load of money and then they can exit very quickly. What's that going to do to my startup when I've got these guys that are invested and then quickly exit? Because it's so liquid.
Well, I think the question then becomes, why are they exiting? That's probably what comes to mind. If you're developing a real product with real value that's producing real results, then you should be delivering real value to those investors. If just the fact that they are exiting, I think you've actually unlocked something there for them, because previously, would they have invested in you in the first place if they saw the risk of not being able to exit? Good
answer. Great answer. Exactly. No, probably wouldn't have. Yeah. Exactly. So, but that's what I'm saying. So all of a sudden you get these exits. I don't know. As an early stage entrepreneur and investor, I'm trying to get my head around it, but I will. May have had a couple too many beers tonight.
Really?
Anyway, now cutting straight through. I've got a question from the crowd here, sir.
If I'm building a compliance service, can I avoid centralisation?
The question was, if I'm building a compliance service, can I avoid centralisation? Let's roll through the audience. Let's roll through the panel.
Let me add to it and say, if I can't, doesn't that explain why commercial services aren't driving adoption?
I think that's an interesting one. I'm just going to add to the question and then keep it going. But I think it's, I think when you're looking at like protocols or platforms that say we're truly decentralized, but all of the peripheral stuff that we used is centralized, then it's a fundamental question to be asking those protocols. And we kind of say, well, we're not fully decentralized for various reasons. A lot to do with our users and how do we onboard them, key management, that sort of thing. Like commercial reasons are why we're not fully decentralized. So I don't have an answer, just more thoughts.
So I was just going to start, just to clarify, when you're talking about compliance, I'm assuming complying with regulations, KYC, AML, or?
Yeah, AML, CTF.
Yeah, so I think what you've got is, if you remember, who are you as an individual and which sovereign state do you belong to is essentially a centralized process in our society and civilization today. There are the proposals I've seen of space organizations and decentralized countries, and there's the ship of the sea where you can travel around the world continuously. And I guess then you're a person of the world again, but it makes it very difficult to have a passport or identity without having a centralized sovereign state to verify that today.
But I wasn't asking how we avoid it. I was asking if I'm just building a service which is compliant to AML/CTF, can I avoid centralisation?
I think right now, no, because these organisations are central.
Right. So if that's the case, wouldn't I be better off building my application using a database?
That's a very good question.
What point does the anonymous pipe play, other than possibly a writing a transaction timestamp? You know.
Right. So, well, let's look at Bitcoin, right? If it was a database right now, I don't think it would have lasted 9 years to being completely open source to all hackers.
Different. That's decentralized. I'm saying I've got to build a centralized application. I am beholden to the regulator. That's part of my responsibility. So therefore, I need to go out and build something to bring on customers so they can transfer value. Might be a tokenized security, etc., etc. And at some point, it would appear that I am dealing with a centralized outcome. And in which case, if I am arriving at a centralized outcome. So in my opinion, this is why this technology has stalled.
Yeah, I think like you're talking about a use case where a database is awesome. I don't think we're trying to like use a hammer for every single use case. Databases are wicked. Like we use thousands of databases at Finder. We use all sorts of different algorithms to store things. Blockchain doesn't have to solve every single thing in the world, but it does have some incredible use cases. I think you've just chosen a use case which is really central, right?
I'm actually talking generic businesses of all kinds. Everybody here who belongs to a business who's transferring value, everybody doing that has to be compliant. They have to pay respect to the fact they have to report suspicious transactions. If that's the case, every business looking to come on to an anonymous chain has to build effectively a network atop the anonymous chain. And that's where I'm questioning the validity. Sorry, Dave.
Check 1, 2.
So just to quickly...
No. Fucking great mate of mine, great mate of mine. His daughter-in-law used to work for me. She resigned, right?
Hello.
After 3.5 years.
DJ.
She'd had enough.
DJ.
She's gone to Tasmania. The funny thing is I'm now...
DJ, I've got the answer to that very detailed question.
And my mate from Hong Kong has got the answer for that.
It's one word, trust, right?
Yes.
With decentralization, the network is trusted. When you're managing it as a centralized network, who the fuck knows that you haven't just put all the shares in your back pocket?
That's my exact point.
Yeah.
No, my exact point is exactly what you're saying.
I'll take it.
So therefore, all of the businesses, in fact, I believe this is why the honest ICOs failed. Because like myself, when I thought 5 years ago I could conquer this, I bumped into the reality that if I'm trying to build services atop anonymous chains, they need to be compliant by definition. They're centralized.
I'm just backtracking. Did you say honest ICOs? Okay.
Yeah, that's right. That's why they
failed. Right. Now you got to remember, it's my first birthday party, right? And I am the most important person in the room. It was a fucking great question. It was getting a bit deep. I'm sorry.
DJ. You're a lovely fella. Can I just answer that one question very briefly, very quick to help these
Tim
guys
Lee,
and
it'd be
ourselves?
my pleasure to have such an amazing person answer that question, who's supported me through the whole 12 months. Thank you very much. No, I'm not being serious.
I think the reality of where the technology is, it's still incredibly young, and we need to understand that. I think you can actually mix both commercial and decentralized. And I'll give you an example. There's a company out of the States called Abra that does international transactions. Okay, now they are actually fintech-based, fully compliant in the US, that type of thing. They transfer funds for expats across to the Philippines, to Indonesia, a whole variety of places. They used, I don't know whether they still do, but they used the Bitcoin network as the layer to get it across instantaneously. So in that case, if you're in charge of your address front end and back end, you can still use a decentralized structure to actually have a compliant idea, and that is in existence. Now, I think The wider argument is that ultimately, I think you're actually right. I think the technology that's being created, which is phenomenal, and is actually designed to strip out the financial institutions, will actually make them stronger. And I think ultimately it'll gravitate towards exactly what you're saying, but in the interim, all the layers that are actually in existence will be used, providing you can actually look at the onboarding and offboarding, within, where they're controlled at that end.
No, he makes me look good, as I said. Okay, you guys look good. Mate, what I was thinking was, there's a guy in the audience that I would really love to ask a question. He's probably got fucking beer. Where is he? Rob. He's gone for a cigarette, obviously. Yeah, he's gone for a cigarette. Okay, cool. Right, okay, so now, we've got a few more questions to be had, but who would like to ask them?
Oh, it's over here.
Nice.
Supply chains, blockchains. For the panel and Brady, it seems like humans are always inherently kind of in that system, inputting data into it. So how do you overcome that? How can it? Because you can't trust. So how can you overcome that?
Overcoming humans.
Well,
good question.
For example, like with the grain that you were talking about, Brady. So you got your farmer. He says, "Oh, today I fertilised my crop," and then he puts that data into the blockchain. But that farmer can input it whatever data he wants.
Yeah. So if we
Brady, you're welcome on any panel.
So if we roll back to a consumer perspective, really what we want to know is, can I trust a claim that's made about a product or an externality attached to a product? One of the reasons that we often don't trust that claim is that we can't see either who's made it or what data backs it or where that claim was made along the supply chain. In a blockchain ecosystem, I guess our role as a protocol provider is not to say to every farmer globally, you must use this IoT device or sensor or scanner or whatever else to capture data because we don't trust you. Our role is to reveal the source of that data and allow then a consumer to make a judgment as to whether or not they trust that. And I think that that's kind of the only way to overcome the fact that supply chains have such low digitisation already, and that we are going to be incrementally building up our digital capacity along supply chains. It's not just like we're going to roll out at once a fully digitised supply chain. So what we do is essentially reveal where certain claims are made attached to assets in our ecosystem. We reveal who made that claim. If there's a data set backing it that might be stored using IPFS or off-chain somewhere else, they can unlock that data set as proof of the claim that they're making. And if you take a use case, for example, like organics at the moment, if you buy an organic product, all you have to trust is the label that says organic, and you can't interrogate that, beer and ask it, are you actually organic?
Peel it back and then go, where's this come from?
Exactly. So if you kind of wind back to then on farm, when they're actually handing over the wheat that was grown in an organic way, they just will drive up to site, their load of wheat in the back, and they'll say, oh, this is organic. And then the person who's standing up there says, oh, did you send through your organic cert? And they go, oh yeah, I emailed it through last week. They might hold up a piece of paper or say, I'll send it to you next week. And that's our only proof. We have no way of knowing if this was independently verified or if this was organic or if it wasn't. We have no way of connecting that claim at the beginning to the claim that was made by the farmer at the beginning. The claim at the end to the claim made by the farmer. So what we do is we create a digital representation of that beer that you can then interrogate, and you can see more information about that organics claim. So was it just a farmer who had a PDF and handed it over? Is it a farmer who's just signed that claim on chain from a data capture as simple as like the tool that's being used by the site operator who just says, yep, this is organic? Or was it independently certified on chain by a registry maintained by Australian Certified Organic that checked the details of that asset and said it was organic? So it's kind of, we just act as a tool to reveal.
But you guys are the only guys doing it, aren't you? Like sort of like, hello,
Organics.
boom, 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 we're agri-digital, no one else is doing it. Is that right?
There are other people playing in this same space. I think provenance is really taking off because, like, people want to know where all those
So
claims
hang
are
on,
coming
in
from.
Australia, sorry.
In
Question
Australia.
in Australia, yeah? Anyone else doing it in Australia?
There are other businesses in Australia looking at the provenance stuff
What
for
names
sure.
are those?
There is another one of a very similar name to ours. I'm going to do free promo now for Block8.
Yeah. Oh, there you go. That's right.
I
Okay,
don't
cool.
actually. I don't know what they do, DJ.
No,
You'll
no,
have to tell
no,
me
it's
more.
good because it was one of the first things I ever saw was about the provenance of products.
Yeah.
And it happened to be in marijuana because I was researching the medical marijuana market 3 years ago, and I was researching the medical marijuana market in the US.
Oh, it is. It's like marijuana, wine, and
Right, it was hot to
greens.
trot. Then I went into
Other greens.
and that's
than
another
marijuana.
story. Then I went into business lending, and that was a fucking failure. Lost fucking half my fucking assets. But anyway, another story. So
what do you want to know about your marijuana? That's when we roll back and we say, what do you want
that's
to
what
know?
I keep saying because I keep promoting your business, and then guys look at me and go, "Yeah, great. Okay, so I'm going to grow this weed, and then you're going to go and put it on the blockchain." Which is what? It's like a database, and then we're going to sell it to a bloke down the road that then pays tax on it, and he sells it to another shop, and then he sells it to people. And so, like, how do you track that, nice
That
Cincinnati head
yeah.
that's been grown and managed for?
So that's not-
Because I don't think there's a Tony Hilda. Is there a chip in it?
Well, you can use tamper evident RFID.
Hey, mate. We need a
No,
microphone.
that's an interesting point because when you're thinking of something that's uniquely identifiable, right, like tuna, you can tap or you can put an RFID tag on something and follow it as it goes along the supply chain much more easily. When you look at something like grain, which is a massive industry,
exactly.
and SAP systems touch like 90% of our bulk supply chain. So there are digital technologies there. The problem is none of them speak to each other. None of them share data with each other. Organisations don't share any data with anyone else. Farmers don't receive a feedback loop on how their products perform, and they have no way of proving anything out once it gets to the end consumer because there's no linkages in those data transfers. So that's the use case that we're looking at and saying, wow, there's a massive market if we can just allow these applications to tap into a decentralized way of
So you're
sharing
talking
that
about
information.
Oracle.
Oracle.
You're talking-
Oracles, both.
I love oracles. No.
At the application layer,
No,
whatever.
So that's what I'm saying. So hang on. So now you're telling me that it's not being built, but you're just waiting for the big IT companies in the world that have all the ERPs to tap into your chain
So we
to
integrate with
verify
them.
it for them.
So we integrate with them. We integrate with everything from like on-farm precision ag tools all the way through to like a consumer application where you can scan a QR code and see that product.
You guys making any money yet?
We are revenue positive on our application.
Rev positive,
and then
yeah?
we... And
How
then
much you got in the bank?
Hey, chat to me later.
What runway
I
we
didn't
got?
sign that NDA that Fred was signing earlier.
No, there was an NDA signed at the door. Everyone says, my NDA, mate. You fucking game on. Oh, no, you're posh, you're a speaker. I suppose you... Tom, before they leave, please. Yeah. Okay, good. Well, I mean, is there any other questions from the audience before we go to the smoking panda? And I'm putting fucking card behind the bar so everyone can have a drink. And I'm looking at you all now individually. I'm scanning. I've got this new thing. It's a blockchain scan. If you're not there, you're in trouble, right? Because we need to support our sponsors. Is everyone up on that? Do we agree or not agree? Okay, so obviously we don't agree. Does everyone agree? No, we're going to get a bit creepy here. Shall we get a bit creepy? Tom, can we get a bit creepy, please? Can we dim the lights? No, fuck it. Okay, right, let's wrap this up. But Tim Lee, would you like a parting comment?
Go behind you.
Comment.
Go
Much
behind you.
weed have you had? A parting question. All right, a parting question. I'm actually going to be producing a podcast in mid-November, and the first season is all about blockchain decoupling from cryptocurrencies. How do you see that happening? Or do you think crypto will survive? Or do you think crypto will just be a petri dish of open source ideas and R&D?
Yeah, I think that's a great question. Most of my week has nothing to do with cryptocurrency, and I run a blockchain product.
Yeah.
So
So you're
I'm all for
wrong.
that.
Right, next.
No, so I think it's great. Yeah, we agree. But we agree.
What, it's going to be a Petri dish?
Oh, I didn't listen to that part. Sorry.
I mean, I'm being a bit flippant. You asked me to ask a controversial question.
I did ask you to ask a controversial
Well,
question.
let them answer.
Can you ask it again for me? Because I'm a bit slow. No, sorry.
Yeah, look, I think you're going to see both industries thrive personally. I think blockchain as a standalone sort of service without crypto is going to be huge, but I also believe in crypto, and it's harder to pick the winners in that space, but crypto is a response to the failures of money in the monetary system, and we certainly haven't fixed that. We just pile debt upon debt every day to kick the can down the road, and basically the premise of capitalism and the way we've built our economies is in sort of dire straits. So I think crypto is going to change the monetary world in a lot of ways. So, and I think blockchain will too.
So, mate, what's the difference between... Check 1, 2. What's the difference between crypto and blockchain?
You can speculate on crypto. No, that's...
No, it was a poignant question because you said, am I just picking at straws? Okay, cool. Next.
I agree with Brady, which is blockchain is
So you don't agree with... No, hang on. Have we got... You don't agree with Toby?
I agree with Toby too. I think everyone said the right thing, which is blockchain is wider than just crypto, and crypto is an application of blockchain. It's the first application of blockchain, and it's very much a demonstration of how the decentralization of trust can work for currency. But there's also many other applications for blockchain that decentralize trust that don't involve monetary payments, and that's what we're also seeing develop today. So the answer is yes to both.
Great, and that's a really common man's fucking answer because I understood it. Thank you very much. No, I'm serious. Yeah, I know you're all smart out there, but that's you, not me.
I would agree. I think I don't think you're going to disconnect cryptocurrency from blockchain. That's very difficult. I think blockchain is a technology which was developed in the 80s, right? It's not a new technology. I don't think we're always going to find new ways of executing that, but I think the database is pretty strong as well, right? Those are two technologies which have been proven.
Which database, mate? Oh, you mean traditional databases?
Traditional databases, I think, are still dominating in terms of percentage of use cases. I think if we're finding more trustless where we don't need, we can have trust through the blockchain, more use cases of that would be awesome. But money is kind of a fundamental, major thing. Like, I'm pretty sure everyone used their money today, and I think we're going to use it again tomorrow. That's like kind of high use case. And if we crack that, I think that is like a revolution as good as the internet.
Awesome. Quick question. Are there any developers in the house? Hands up. Are there any developers? 1, 2. Any coders? Any developers? 3. Okay. Are there 4? 4.5. Okay, no. Next question. Are there any traders in the room? 1. All right. Are there any investors in the room? All right, well, who the fuck are the rest of you? Mate, I started this meetup. I didn't expect, I want hands up, right? Honestly. Okay, now let's forget about that last comment because I'll get in trouble for it. I got to say, but just a quick pick up on that. It's sort of like, do we understand? Has anyone heard of a technology called Fabric Hyperledger? Yeah, do we know about Fabric Hyperledger? Hyperledger Fabric. And what does that technology do? Short answer.
It's an open source framework.
Perfect. That's all I need to know. It's an open source. So IBM are running around town going, we're IBM for Hyperledger Fabric, right? But it's an open source technology. It's out there. This is exactly what Fred's talking about. It's a fucking database that kids know about anyway, and we're all going, it's blockchain. Yeah, where we go. right? No, I just want to swing it back to the development angle. No one, how many developers are in here? Where are they again? Oh, it grows. All right, anyway, you fucked me. Okay.
So good.
So tonight we're going, because it's my first birthday party, and Bill's putting his card behind the bar, and I'm putting my card behind the bar on behalf of Independent Reserve, because Lasanka's not here, and Horby's here. Where's Liz? She's putting her card behind the bar as well. Okay, so no, we've all had a bit of fun tonight, it's all good, but is there any more hard-hitting questions that you just want to get out before you come and join us at the Smoking Panda? Now, if you haven't heard of the Smoking Panda, it's number 5 Park Street. Oh, Mike Hulse, number 1. It's 5 Park Street. So basically you walk out here and we'll all go together. I want us all to go together. So if you want to leave now. If you're not coming to Smoking Panda, you can leave now. But if you don't leave now, you're all coming with me, because we're going to go... We're going to do this whole unit, because you know why? Because the Smoking Panda have been so good to us, we've got to put a couple of bucks over the bar. And imagine I put my card over the bar and no one's there to spend it. Can you imagine that?
Yeah. What about all of the promising plastic champagne glasses?
There's champagne in the fridge, there's cake here.
That was the question.
We can cut the cake, but I actually think... You've got sparklers. We've got sparklers, we've got cake, we've got everything, right? But I think there's some other hard-hitting questions here that people haven't actually got that... You've had one already, but I'm pretty sure... Is there any other questions or not? Yeah, there is. I see, I know the hands are going up. And this is... Oscar, why did we start this meetup? Hello, let's go. Roll it on. We've got another 5 minutes of questions. Let's rock it.
Okay, this question is to panel, but I don't expect an answer actually. I have thinking about this for quite a while. I mean, for a cryptocurrency, like take BTC as a sample, the design is to limit the total amount, and the later joiner has to pay a higher price for each coin. And if some projects decide to publish a token to accept new investors, that means the more user you have or the more investors you have, the lower the later comer joiners will pay more price. But that's, from my understanding, quite unfair. And just my understanding. And I agree. Okay. So, and also,
it works the same with money though. Like dollars getting inflated every day too. Like
yeah, I mean, if you use the token as a tool to transfer value, if the price of the token against fiat currency is unstable and volatile, quite high, and people do not expect to look at it as a stable price, what's the meaning of transfer value? I mean, today I'm transferring 1 token for $1. Tomorrow, the 1 token's transfer money is $2. I mean, in your project, how do you keep it like smoothly working?
Yeah, in response to like latecomers pay more for crypto when they've got a deflationary schedule, it's the same for money. Like you work to or run a business to earn your money. Every year you're getting a little bit less for that input of labour unless you get a raise. Like that's inflation. It's sort of built into most monetary systems. And then the transfer of value thing is, yeah, I don't think a store of value is great for transfer of value or a means of payment because, yeah, in my view, Bitcoin's always going to be volatile due to that its output schedule. However, if we come up with fast ways to transfer and hedge that, it should become irrelevant. If you can send someone Bitcoin in 20 minutes, buy it, sell it, you're not really facing a lot of price risk. So I think there's a lot of ways to get around that, let alone we invent currencies with more stable quality.
Like Raven. Now, Gricey, are you still in the house? Mate, can you just, have you got a question or not? Okay, well, you can leave then. See you later. Bye-bye. No, mate, as I said, you guys are back next week. Mike Hulse, do you have a question? No, covered it all. Okay, good. Okay, now, is there anyone in the audience that really feels like still? No, but hang on. Is there anyone else? Oscar, I know what you like, Oscar. I know you like letting the audience. Who? Has he got his ID? I need a KYC. Is it on chain or not? Is he on chain or not? Gary. Ladies and gentlemen, I'm so honoured to have this man in the house. I worked for a company years ago as a salesman. Not sure I sold anything, except I did actually sell the company. That was the problem, right? But Gary is like one of the forefronts of the brains that I've ever known that knows everything about... No, about
Ignore all that. But, so my question was for Matt.
As I said, if I talk, no one else talks, but Gary's got a question.
My question was for Matt, and I apologise, I haven't read your white paper, so I know nothing about you. But I couldn't understand how you are different to like a fast chess registry. Like what? It sounds to me like what you've got is a centralised, permissioned structure that is created a petition division of an external asset, which you've called a token, right? So, and you're allowing people to trade it. So, can you explain why that's very different to, to a high-performance registry? I don't quite get it.
So, very simple answer. Chess is controlled by one entity, the ASX, whereas blockchain is accessible by multiple entities. And that's why I think for us, being open and accessible is such a big difference, and why blockchain, because at the end of the day, chess is high performance, it's great at what it does, and it's high fees because the ASX controls it entirely. Whereas blockchain, you don't have to trust the ASX, you don't have to rely on paying the fees to make the service happen. You can plug in and do a peer-to-peer transfer.
So it's a cheap... Hang on, we're on video here. So it's a cheap chess.
It's an open chess.
So you're going to be a decentralised structure, enabling the transfer of ownership of share assets. Is that right?
Exactly, and I think the other big difference is basically we're opening up to different asset classes. So with chess, you have to conform to the ASX's rules. You have to be a listed asset, whereas what we're looking at is unlisted assets that previously had no opportunity.
Right.
He's all over it. But hang on, where are we at with Equities and the other crowdfunding platforms like what's that? Mate, exactly. That's what I was thinking of. Venture crowd. Where are we at? Where are we at with that? So how do you guys differentiate yourself to the traditional crowdfunding platforms that are out there, or equity crowdfunding platforms?
Well, I'd argue that we're partners with them rather than anything different. They raise the money, but those shares have to get liquidity somehow.
So, okay, cool. Maybe I'll build their blockchains. Oh no, sorry. Sorry, Tim. We won't talk about that. Okay. I've got a bunch of people down here that I want to introduce. These people work with me. They've worked with me for years. They've laughed their heads off, and they think it's a bit crazy. But anyway, if anyone wants to meet them, they're down here. They're good guys. They've been wondering why I haven't brought out the bottles of champagne yet. Okay. Anyway. So, is there any other hard-hitting questions? Because otherwise, I think we've got to go to the. Okay. So, in that sense, I want to give it a big round of applause. Thank you very much for coming.